You're listening to The Whole Truth, a Resources Rising Stars podcast.
David Flanagan is up and running once again. The man behind the Atlas Iron juggernaut in the Pilbara has got a new gig. Arrow Minerals is the company, and man, has he got his hands full. This time he's plying his trade in Guinea. Arrow has two projects in Guinea. It's a pretty simple story. The big iron ore project called Simandou North, which, as the name suggests, sits immediately north of the giant Simandou project being developed by the Chinese and Rio Tinto. 100 kilometres from the railway line, he's developing a bauxite project, the Niagara Bauxite Project. The world desperately needs bauxite. The bauxite price has been one of the great performers of this year, thanks to falling supply and growing demand. David Flanagan's Arrow has tickets in both these lotteries. He says that he's going flat out on drilling both projects to establish scale, to build up a big resource in both cases, and this is all about capitalising on the infrastructure. In simple terms, there's a railway line being built right through his backyard, easy access to both projects, and as they say in the world of bulk commodities, if you haven't got access to infrastructure, you haven't got a project. David Flanagan's got relationships already with Baosteel, the world's biggest steel producer, and he's talking to the Chinese aluminium giants at the same time. They want these products. He's got the products. They've got the railway line to transport them. Flano's job is to drill these projects up, do the economic studies, and take up some of the capacity that's on this whopping railway line that goes to port. Flano takes us through where he's at, what happens over the next 6 to 8 weeks, and why he believes he's got two world-scale projects on his hands in Guinea. Flano, you have 2 tickets in an almighty lottery.
How good is it?
2 tickets, one with bauxite written on it, one with iron ore written on it. What have they got in common?
They're right next to a railway line, Paul.
And they say in the world of bulk commodities, no infrastructure, no business.
Fundamentally, that's why we're there. Someone's building a double-track railway line, 675 k's long, and that's a 675 k long fishing net. We want to be in the net.
Right, so let's break these two things into half. You've got the Simandou North Iron Ore Project and the Niagara Bauxite Project. The common theme being that they're both in close proximity to the railway line now being built by the Chinese.
Yeah, and you know, we can dig it up, crush it, screen it, put it on a truck, put it on a ship. We don't need an autoclave. We don't need a chemistry set. It's relatively simple. The tonnes should be relatively easy to define, and we're well on our way to doing that.
Now, let's break these things up, Flano. Let's look at the iron ore first. What do you have in the iron ore project in Guinea?
Firstly, we've got a tenement that's 25 k's from the railway line, and our tenement immediately adjoins the world's largest high-grade undeveloped iron ore project. And the geology from that tenement runs onto ours. We've spent about 3 months drilling, and we think we've found enough mineralisation there to underpin a resource, a scoping study, and then ultimately an operation.
So your Simandou North Iron Ore Project, as it's called, immediately abuts
Simandou.
The Simandou project.
We've just added the north bit, Simandou North.
Well, it's logical if nothing else. Might not be the most original piece of branding, but it does describe where it sits in the world.
People know where we are.
And Simandou, of course, being developed right now by Rio and the Chinese.
Yeah, so you basically got the winning consortium, Baosteel, Chinalco, Rio Tinto. They're the main parties. Yeah.
So two of those names, Baosteel, one of the biggest steel producers in the world.
They are the biggest
in the world.
They are the biggest.
And Chinalco?
Yep, biggest aluminium. Yep.
So they know a bit about aluminium, and these companies are partners in the railway line that's going straight through your backyard.
Yeah. So and it's not by accident that you've basically got Chinalco already operating in bauxite in that country. They're partners in that rail. They're partners in the iron ore mines, and as are Baosteel.
Now, what do we know about Simandou North? You've put a whopping exploration target on it, which obviously you can't just make up. It's based on previous drilling. So you've got some confidence about what you've got there. What are you doing now to try and establish and show the world that Simandou North is going to be a viable iron ore operation on your watch?
Yeah. So we drilled about 530 holes into the tenement, testing all different types of geology. And the intention is to define something that's going to fit with our strategy. And our strategy is about starting the cheapest viable mine possible. Now, we've done this before. We did it at Pardue. We did it at Wodgina. We do it at Abydos. And what you do is you start something small that works, you get a re-rating out of it, and then you expand. Now, to get that up and running, the reason it's capital light is because of the railway line. It's because we've been able to find a lot of mineralisation near surface, all in one place. And, that's the plan.
So it's very shallow mineralisation. It doesn't look like the Pilbara, does it? It's not a big, deep-lying ore body. It's more of a flat-lying ore body that you can get into with a minimal strip ratio.
There are a couple of flat bits, but what we're focused on is the banded iron formation. So the current scoping study, the current exploration target, does not include any Kanga mineralisation. That's to come. So there's still some work being done on that, but it's all about that banded iron formation. Now, we've signed the MOU with Baosteel, which contemplates a Mindgate sale of a hematite fines product. So in Brazil, you basically take this itabarite stuff, you drill it, you blast it, or sometimes you don't have to blast it, and you basically crush it to -6 mil, and you run it through a gravity circuit, and the silica goes one way and the iron goes the other. And at the moment, the test work says that actually the silica goes that way and the hematite goes that way, and it goes 61 to 64%. So we're in the process of doing more work to understand the CapEx and OpEx of that and what the final specs will be. And then we can basically tweak that flow sheet to give Baosteel the concentrate that they want and the concentrate grade that will basically make the project fly as well as possible.
So it's a very basic processing route. There's no great complexity about it.
I've loved this stuff for a long time. But back at Atlas, we invested in Centaurus for years because we sort of thought there was an opportunity to develop high grade in Brazil and use that to complement our lower grade stuff at Atlas. And it turns out that the Brazil geology is the same geology as Guinea in a way. The continents used to be joined together. So we found a lot of this stuff. And there is a lot on our tenement. And it's inconceivable to me that we found it all in the first few months of drilling. We also found some higher grade DSO grade stuff that you can just drill and blast and crush and screen and ship. But probably not enough to underpin an operation just yet. So we've got a bit more work to do there. But again, it's early days. Like Rio have been exploring to the south down there for 30 years.
But it speaks volumes about what you could have here and the size of the operation that Baosteel has already said, let's talk about an agreement, a framework to buy your iron ore under a Mindgate sale agreement.
Yeah, no, it doesn't. And if there was like flat out no capacity on the line, they wouldn't sign this thing with us, right? So I think the MOU is a great step forward. It's sort of they are the biggest guy in town. They want your iron ore. Well, that's what the MOU is about. Yeah. So that gives us that opportunity to sell the product to them, and it goes on that rail, and it solves all of the supply chain issues. And we can tweak a very clean product. It's very low alumina. And we could produce a 70% grade con if that's what they want.
Now let's move the focus now to the bauxite. Yeah. So that's also obviously about 100 kilometres from the railway line. Very easy.
Again, this sort of fits with the whole strategy where there's a railway line. So where are the mineral deposits that are sitting within 100, 150 k's of that line that are capable of being developed? In 2007, Vale drilled out this whole tenement on 800 by 800 metre spacings, and they defined a lot of mineralisation, and we've reported an exploration target here. It looks good, right? And in 2007, there was no railway line. So those guys just sort of walked from it. But since then, the bauxite price has gone up a lot. Global consumption of bauxite has gone up a lot, like more than doubled. And,
well, let's talk about that. Flesh that out a bit. Because the market for bauxite would have to be arguably the most boring commodity for most investors. The people over the years look at bauxite. It's always been the domain of the big boys, the Alcoas of the world, Aluminas. It's not the sort of thing that investors in small and mid-cap resources stocks have ever had much of an opportunity to get an exposure to, and B, never wanted an exposure to it. But the world has changed rapidly, hasn't it?
People used to say that about iron ore. Why would you go and invest in iron ore companies? And, God, it's such a boring place, when no one makes much money. Well, I tell you what, they've always been making so much money out of iron ore.
And so now with bauxite, it's moving into the same space, the demand-supply dynamics of bauxite have changed dramatically, haven't they? In fact, it's been one of the star commodity performers price-wise this year.
And for the right reason. So aluminium is one of the most recycled substances on the planet. So 75% of aluminium is recycled. So if you're sort of thinking about minimising carbon emissions, sort of maximising uptake of all of these future-facing technologies around reducing footprints and renewable energy, it's about aluminium.
But it's replaced steel in so many places, hasn't it? Cars being the obvious example.
Yeah, so I've just come back from China. I was at Aluminium Week in Kunming, and there's this strategy about replacing a lot of stuff with aluminium in China. And, because things that are lighter cost less to move around. Things that are lighter, you need less of it. And if you can recycle it, it's got use after use after use.
But China, it doesn't have all the solutions at its fingertips, does it? China is running out of bauxite.
Yeah, so part of the reason why the price has taken off and there's been so much inflow of investment in bauxite into Guinea is because there's been declining resources and reserves in China. Yeah. So, and it's a bit like the iron ore story, the same as the old days, right?
So you're playing to that need for bauxite, and you got both supply on your side and demand on your side. So what are you doing to establish this Niagara Bauxite Project?
The other thing we've got on our side is that we're hunting for tier one assets. So something like Guinea, because there hasn't been infrastructure there before, you've also got the capacity to find something massive. So let's just say there is 250 million tonnes of bauxite there, right? Well, at today's currency and at today's prices, that's in situ value somewhere north of 25 billion Aussie. 25 billion.
So you're sitting on a treasure chest.
So the idea is that this infrastructure creates opportunity for shareholders, it creates opportunities for the customers and opportunities for Guinea. That's like a 6-7 million ounce gold deposit.
So the train line unlocks this enormous
and that's
value.
what it's all about. So because there's a railway line, it's on. And that railway line, we think it's got more than 400 million tonnes of capacity. So between Rio and the Simfa joint venture and Winning and Baowu, their target is to get that up to 160 million tonnes per annum of iron ore. So we think that between there and the ceiling, there's plenty of capacity.
So there's a few empty seats on the train.
Yeah, absolutely. So we want to get to the front of the queue and we want to get a good seat.
All right. Now let's talk about what you're doing to take up some of that capacity. Drilling is about to start?
Yes, so there's rigs currently mobilising to site. 3 rigs are going up there to drill.
For the bauxite? For
the bauxite, and we'll have results out from there this quarter.
Yep. So what are you hoping to establish with this drilling? What's the name of the game?
So we've been really clear. The intention is to drill this and produce a scoping study next year and to drill enough holes in this program to have enough indicated and inferred resources to underpin that scoping study. Now, this is not a JORC thing, but the ASX tell you've got to have at least 70% of your in-pit inventory in a scoping study as indicated. So we're planning that. Well, that's the plan. So at the moment it's all drilled out on 800 by 800 metre spacings. Now, if you measure 800 metres, Paul, that's a bloody big distance between drill holes. So we're going to go in and infill those and then wrap a resource around it and work on it.
Right. And what happens from here?
So what we'll do is we've already gone in and done a whole bunch of baseline environmental work and met all the relevant stakeholders, introduced ourselves. There's no rare flora or fauna. There's nothing of issue. We go and we drill out the deposit. We get a resource. We get a scoping study. We continue all the environmental work. We talk to customers. We come up with a costing, CapEx and OpEx in a scoping study environment, come up with some numbers, and then we proceed, if all things going well, and I think they will, to a feasibility study. And we compile all of the environmental data with that feasibility study document, and that becomes our application for a mining permit.
So you're doing these two, both the iron ore and the bauxite, in parallel?
Yeah.
Advancing them side by side?
Yep.
Is there a race? Which one's most advanced?
Yeah, no, there is. But it's a classic speed to market strategy. And not everyone gets it, but you run everything you can run in parallel. You do it in parallel. And you accept that there's going to be some things that you get wrong because you jumped early, but we budget for that rework and we still get it done 6, 12, 18 months earlier. Okay. And And whilst we're doing all of this, we'll get to a point where we'll go, oh, well, okay, we're going to go with this project. It's going to be 2 to 3 million tonnes of this from here. DSO product, CapEx will be this. We'll park that stuff. And if we'd known all of that in the beginning, we might not have done all of that. But you don't know the answer until you've got the answer.
Now, people listening to this would say, look, Flanagan, that's fantastic. Both these projects have obviously got huge upside and world-scale potential. That's terrific. But how does a company of Arrow's size, a mini resources company based in Australia, have any hope of unlocking the value of these things?
Yeah, so it's all about capital light. Okay, so probably people don't realise that we started our first mine in the Pilbara for $13 million. And the Pilbara is probably the most expensive place in the world to operate. Our second mine cost about the same, $15 million. And by the time we were running our second mine, we were making $20 million a month. Okay?
So you got every intention of developing both these projects. You don't see yourself as a conduit where a bigger company will come in and say, look, that's great, Flano, you've established that these things are viable, we'll have it now.
Yeah, so it's all about developing these projects and having a pipeline of projects. So the project might be the starter operation, which is the smallest viable operation. So the smallest viable operation has the lowest CapEx. We start that project, we get up and running, and I would expect that shareholders will get the benefit of a re-rate. We'll also get the benefit of being able to engage with the market as an operator. Everything changes when you become an operator. And from that position, we can fund our expansion of that project, or we could fund the alternative project. So if we've started the iron ore, we start that and then we start the bauxite, or we start the iron ore and then we expand the iron ore, or we start the bauxite and then we expand that, because it's all about having stages of growth. And, that's what shareholders have invested in. They want to back us to maximise the strategic value of that spot next to that railway line.
Now, you've just come back from China. You went to Aluminium Week.
Yep.
You've been speaking to Baosteel. So you've already, for a little company, you've got some amazing relationships happening here with the Chinese and Baosteel and the like. Where are you off to next? What does this journey take you to? Yeah,
so in about a week's time, I'm off to Guinea, and just to sort of meet and greet key people in Guinea, in government, go visit the guys at the project, the whole community out there, and get a good look at the rocks, talk to people about ports and rail and permitting.
Fantastic. Well, look, as we said at the outset, you've got 2 tickets in enormous lotteries. I mean, if 2 of them came in, fantastic. But if one of them is still a game changer, and you know that there's mineralisation in both projects, this isn't like it's greenfields exploration. You've got exploration targets on both, haven't you? So really, it's a case of trying to drill it out to establish that these things will fly.
Yeah, we're not going to die wondering. So people should be looking out for drilling results from Niagara in the near term, MET results, scoping study results, resources, and all the numbers.
Great. Great story. Usual energy that you apply to things. It's in full flight. Can't wait to see where you land in about 6 weeks' time.
Okay, cheers, mate.
You've been listening to The Whole Truth, a Resources Rising Stars podcast, produced by Resource Media, hosted by Paul Armstrong for Reed Corporate. Please note that Reed Corporate does not provide investment advice, and investors should seek personalised advice before making any investment decisions.